We're just a few days into the fourth quarter, but the Chartmaster is already gearing up for year end. Carter Worth is laying out 5 different scenarios on how we could finish out the year. So Carter, take it away.
Sure. So this is kind of on the fun side. This report's done every year. It's the 14th annual Choose Your Own Adventure. And the idea is to try to determine once Q4 has started, not so much how it ends, which is obviously important, but the path traveled. And so let's look at the 5 scenarios that were put out this morning. First chart is just the S&P itself. And here we sit after our 10% plus correction and a little bit of strength. So the first choose your own adventure choice, scenario 1, is where we're basically, as we are, sort of 3,400 plus minus range bound. And then we get aggressively re-rated right after the election, basically right to the September 2nd high, a 5% move. And then for the rest of the year, kind of drifting higher from there with a close at 37.25, a pretty big year, up 15 plus percent. The second scenario, also bullish, is where we're range bound here, 3,400 plus minus. We do get re-rated higher after the election, but we stop at the September peak, September 2nd peak, and then sort of fade into the end of the year, ending around 3,450. Still a pretty good year, up 6-7%. Scenario 3 is on the bearish side, which is to say we get re-rated lower immediately after the election, and yet then it stabilizes the S&P around 3,000 and is able to climb back to the 3,200 plus minus level where it closes the year, and that would be actually a loss of about 1.7. Choose your own adventure number 4, also bearish, in this case a re-rating lower after the election, and then a very big recovery, seasonal or what have you, in December and gets us back to 33.50, a gain of about 3% on the year. And then the final choose your own adventure scenario, the most bearish, is obviously churning here, 3,400 plus minus, an aggressive re-rating lower. We get as low as 28.50 and don't really recover much. A little bit of a kick save in December, ending around 28.75. That would be an 11% decline. Typically, we get 300 or 400 responses from all over the spectrum, and we're adding them up now.
Okay, so the opening question is choose your own adventure, which scenario? So we're going to put it to the traders, and then, Carter, we're going to get your pick of scenario. Let's go around the horn. Guy, I know you're paying close attention. Which of the 5 scenarios do you think are going to play out for the year?
You always start with me, but this time I was paying attention. Door number 4, Monty, for you Monty Hall fans. Let's make a deal. I know there were only 3. I picked 4. Carter Worth would have been a great Indiana Jones in terms of choosing his adventure, but I think the most likely, in my opinion, is we basically get back and see the levels that we saw a week or so ago, vacillate around there. I think number 4 for me makes the most sense.
All right. Tim, what do you say?
Well, I know you're a big fan of the Bambino, so I chose number 3. And I'm also a fan of letting the market find its place here in some of this uncertainty. I think we had an enormous rally through the summer. You can see that the market is really trying to respond to that, but going into a period where really whatever happens in the White House, I think markets are gearing up for 2021. But banks need to get going if this market's going to finish positive, and I'm not sure we're going to get that. But I don't think it's devastating, and I think the Fed is still your friend. So number 3 is my adventure.
Karen, which one?
Yeah, mine is number 2. I think that this circle here is we get some certainty on the election, up on that, and then kind of a drift lower into the new year. So up 6.8, I think it was for the year, that scenario, but not wildly bullish.
All right. Grasso?
So I'm looking for scenario number 5. I'm looking actually for, so Carter had said 28.75. I think we actually finish a little bit lower than that, but I think that's right in the same ballpark. As you stated earlier, this rally has been built on lower regulation and lower taxes. I think after the election, you're going to see a drift lower. You're going to see big tech companies in the target. There's going to be multiple reasons to sell the market, but I think everyone is afraid to sell it up until the election because Donald Trump has used the markets as his barometer. So he could pull anything out of a hat going into the election. I think your chance for the bulls is going to be between November 3rd and the end of the year, and that's where you see scenario number 5.
All right, so Grosser's adventure entails going to the bunker. Nobody's been picking the most bullish scenario. Carter, what's your adventure? You get the final word.
You guys are pretty, sure, you're pretty covered. I mean, Karen, you've got a fairly bullish one. Obviously, Grasso, the most bearish. I went with number 4. Again, it doesn't have to be 5 scenarios. It could be 50, of course, but you can't write a 1,000-page report. So that would call for basically weakness in response to the election and with a seasonal recovery and strength in December.
Okay. Carter, let us know what your clients vote. We're curious. Thank you.
You bet.
Carter Braxton Worth, Cornerstone Macro.
Shepard Smith here. Thanks for watching CNBC on YouTube.